Okay, and then let's maximize this. There we are. Okay, so guys, audio good, correct. If anyone does not hear me or has any questions while I'm doing this, just let me know. So let's kind of start with big picture from where we came in on the day and what the goals were. And before I go any further, right, all of this is for educational purposes only. The trading futures is dangerous. You can lose your ass. I think that's the disclosure that I need to give there. And the point of the room is to help people get better at understanding the markets and trading better, and not to call trades out for everybody. So I think I got that covered down. So we came in this morning, right? And so if we go all the way back to last night, right? Remember, originally the white zone was 2040 to 2042. We obviously broke that and swept straight down. So dropping down like this creates a conflict for us right out the gate, right? The conflict is we know we're going to open with a big negative tick. And over the last 2 years, the majority of the time, if we open with a big negative tick, we end up with a trade that ends up opening like this, and then the majority of the time, I think it's fair to say, ends up doing something like this, where we have a massive move to the upside, everyone panics out at the open, right? So one of the tricks that we're trying to achieve is how do we know when to get aggressive and get into the trade, and how do we know when to not take that trade, or how do we protect ourselves either way? Well, the easiest way to protect ourselves out of the gate is to simply not trade in the first half hour. That gives us an opportunity to see which way they can take the market and whether they're going to run it straight up or straight down. Remember the objective, and I'm going down this checklist, guys, because this checklist is mostly for me and how I intend to keep my money and make it grow versus trying to structure this so that it pleases everybody. I'm not sure that works, but I don't know a better way of teaching it other than how do I approach it so that I keep my money, right? So taking a trade in the first half hour, if you're good enough to do it, to scalp through it, and you think you can read the market, right? I said that there's two options here. When we were right about here, I said you could short it and put a stop 1 point above the high, or you could go long in here and put it 1 point below the low. And either way, essentially it was a straddle of that position, whichever way you thought we were going to roll. My thought process was we were going to come back down, and really my end target, I think, was down at this 1972 for the day, right? We had this open gap at 1992, and a couple of things happened to me off the open that were important. First of all, I was not prepared. I did not think we were going to open below 2,000 when I did the zones last night. We normally don't gap below 30 points, right? So I really didn't have any zone structure. I had to come in and put these together before the open. So there's a couple of keys to that. First of all, mentally I had to get ready to take the trades. Secondly, when the market changes, right? If you go back to when I was trading just a couple of years ago, when the market went down like this, the majority of the time I was playing for what we're getting now, which is this hook and this hook. But I would try to play for it out of the gate, right? And what would usually happen was, especially if this turned into a trend day down, is I would take 2 stops back to back and I'd be out of the money, right? I'd pretty much have my day stopped. And it protects me in case the market melts or I get into a situation where I'm just totally off on the day. I take 2 stops back to back and I finish trading. So I think the key there is this is the first day we clearly had an expansion in the range overnight, right? We're gapping down 30 some odd points. And how do I communicate this well? I think it was important mentally for traders to go, wait a minute, this is not, the way that we make our money is by recognizing the environment that we do well in, recognizing that the environment that the market is preparing for us, and then we engage it only when we recognize it very, very well. Now that's the objective, right? But there's always a big gap between what you know you want to do, right, and what you actually do, because emotion, fear, and pressure all build in, and they end up causing decisions that become questionable, right? So it's very important when you look in the morning, as I did this morning, I go, wow, we're opening below 2,000. I want to be somewhat cautious. Now, having said that I want to be somewhat cautious, this is what I actually did. I came in and I took a short in the morning, right? Guys, correct me if I'm wrong. but I believe I took my short when we fell back below here on this backside test here at 91. I think I either took 91.50 or 92. I shorted this, and my goal was, so this is a great example of how you can see the market and what the market wants to do, but because probably this is my first day back and I just didn't have all the mechanics working in my head as to how I wanted to achieve my goal, I took the short here, right? So now that I can go down my list and see what went wrong. First of all, I got stopped. I took it at 91.50, and I think my stop was 94.50. So I got stopped out right here, right? And I immediately re-entered the trade pretty much here at 94.75. I basically said my next stop was at 2,000, right? So a couple of things went right, a couple of things went wrong. My thought process here was that this was not going to hold, and that we were going to come and test the top of the open gap, which is what this is. That was my thought process for two reasons. First of all, we have a 30-point gap. I thought a 20-point rotation down would happen today just because of the size of the expansion in the range, right? So when I go back and look at this, I can see that there's a couple things I did wrong. First of all, I got so engrossed in reading the price action that I forgot about my fundamentals of what's a good entry, right? I said today a couple of things that I didn't want to do. I wanted at least a 10-point rotation up, right, as a minimum entry, or approximately 10 points up at least, right? And I wanted to make sure that I had a good stretch, that I had tick divergence, all those things combined, right? So what happened here is when I took this trade, what was the stretch? Well, it was from essentially 88.50 back to 91.50, so that's what, 5 points approximately? Is that right? It's not even that, 88, 89. It was less than 4 points of rotation, okay? So first, I get a big F mark. 4 points is, even if you take away today, the average rotation has been over 7 points for the last couple of weeks. I get a big F there, right? If I had adjusted this to a 7-point rotation, basically that would have put my 1990, I would have put my entry at 1996, which would have put me right here, right? And so realize, and I try to get this across to the guys who I'm doing one-on-one coaching, small, minute decisions have a huge impact on your bottom line. And if you can perfect these and get mechanized and disciplined about it, meaning, and for me, discipline means I don't care if this trade works, right? Because the majority of the time it doesn't, and because my stop is so relatively tight, even at 4 points, my stop is so tight that I can be right and still end up losing money, and that's exactly what happened, right? So if I had instilled even the smallest amount of discipline and pushed this trade back to where I should have entered, which would have been the 96 and change, I pretty much would have had an awesome entry, and I would have set myself up for the potential to carry this trade all the way down from essentially 96 all the way down to 81. I would have had a potential 15-point trade, right? Instead, what happened, and I hope this is interesting, I find this is very, very critical. Instead, what happened was I took the trade here thinking that we were going to come here. I short-circuited the pattern in my head, right? This little detour here, we did essentially do that, right? We came down. This little detour here, let me change this color. This detour here stopped me out of the trade, and then it forced me into a very uncomfortable position, again, from a decision-making process. I now had to decide, do I just take my stop, which I usually do, and quit? Or do I go, no, I really have conviction it's going to come down here, and which one do I follow? Well, I think if I went through my checklist of high probability decision making, what I should have done was just simply waited. This should have been my first entry. I should not have taken the entry here, and it was probably mistake number 2 would have been here. Even though it worked out for me, mistake 2 is over here. And look how it kind of ended up having a domino effect, right? I could have taken, first of all, a full-size position up here instead of a half-size here. When this ended up rolling down to approximately 1991, by the time we got down to this 91, this is where I covered this trade right here. Why did I cover it? Look at how the chain reaction occurred. I made a bad decision here, ended up taking a stop on half size. I was still all right on the day, no big deal. I reloaded the trade, right? So in my mind now, I'm already anxious. And what's going through my head at this point is, I messed up the first entry. I had the read right. I took another trade, which on the second trade was a little bit over half, right? My second entry still wasn't great. It was okay. And then I'm thinking, well, I kind of got bailed out. We came back and tested for a double bottom here, and I covered right in this area. But really, had I done this correctly, what I would have done is I would have covered half my position here, moved my stop to net break even, right? And I would have caught this rollover to the downside into the 10 a.m. hour, right? An hour before New York lunch. And I would have ended up having a 15 or 16 point trade on my hands. And not only that, but I could have started looking for potential reversal areas 20 down. Instead, what happened was, yes, my day was saved and I ended up profitable, but because I executed my trade poorly from the get-go, right, I ended up tripping myself up. I took the trade here, covered here, reshorted here, was grateful to get back to just slightly positive here, and I missed the payday on the downside. And then when we got down minus 20, I was so tired from trying to correct this screw up to begin with that I was completely out of sync, even though I had done a couple things, right? What's the first thing I said? Swing long and triggered, although I was a little late. I noted that when we were already over here, right? Swing long and triggered, so I didn't take any shorts, right? I still made some good decisions. I didn't take any shorts. We were into New York lunch, right? And then I pointed out two things. I said 2000 was one trap, and that this 1989 was the second trap. And I said specifically, unless we closed below this 1989, we had very little chance of pushing to the low, and that what I would have needed was a close below and a hold below, specifically 1989, and that would have given us a push to attempt to break the lows. What did that conflict with in our decision-making process, right? So think about it. This is backside tested Webex high. It failed. You could have shorted this. We actually ended up tripping a swing short in here. I was gone when it did, right? And then what's the one thing that saved us back in here? So when you're criticizing yourself as a trader, this is, I hope I'm not jumping around too much. When you're criticizing yourself as a trader, as I just did, right? I was highly critical of myself when I took the trade, when I got stopped on the trade, and I didn't like how I took the second trade over here, right? Even though it worked out for me. And I ended up, because I screwed up my first sequence, it screwed up my second and third sequence, right? The danger here is when you get a trader that does this, you get into a mentality of, oh, I should have had this, or oh, I should have had that. I kind of took a different attitude that I've learned that's worked for me over the years, which is back away from the market. When my first decision-making process is poor, I'll find that the rest of them are poor as well, right? Now, even if you shorted, because we trapped underneath Globex low, right? And you caught this portion down here. What kept us safe? The one thing that I tweeted over lunch on the private Twitter stream was, even if we close at the low of the day, I'm not going to become bearish. Why am I not going to become bearish? Because it's just not a profitable position to take in the majority of the history of the market in the last 5 years. It just doesn't pay, right? So what that sets me up for here is instead of going, look, I should have had a huge day, because what a bad trader does is he does this. He doesn't look at what he did and doesn't go back and say, well, how could I improve that? What he does, he goes, well, I should have just shorted here. I should have flipped and gone long here or here. I should have shorted here. And at any point in his mind, at some point in his mind, because remember, right, I took a bad trade here. Somewhere in my mind, I ignored the fact that there wasn't a sufficient rotation, right? I forgot about it, whatever you want to call it. I made a poor decision, and I knew it almost as soon as I entered the trade that I made a poor decision, right? But what a really bad trader will do, whether I got lucky or didn't get lucky, is I go, okay, I'm agitated, is what I recognize. I'm agitated that I didn't get this, okay? And I recognize that I'm off base, I'm going to slow down. But what I did turn around and do is go, the market owes me. So when it gets here, I'm going to short the crap out of it to come down, because what ends up happening is you mess up here, you get it back here, but then, back when I was a poor trader, I would short this, get stopped here, short again going, we're closing on the lower day, particularly once we close below like this, I'd go, dude, it is over, and the market's going to close on the low of the day. What's the rule that keeps us safe in that is shorting end of the day, even in uber bear markets, right, is a low odds proposition. So I'm willing to give up that last hour trade, right, to keep myself safe. I certainly didn't read that we were going to be long and, we just had a 20-point rotation up, right? And I'm not trying to fight any of this. I didn't say at 2,000 it should stop and go low. As a matter of fact, 2,000 was our trap point. We know as long as we hold 2,000 that we have damn good odds of coming back and filling the gap all the way back at 2037. Okay? And what's happening here and why this is being fueled is not because there's news out. What's happened is the same thing that happened here, right? Remember when we made that, I made the comment up here, and I'm hoping, if anyone has any questions, guys, fire. I'm more than happy to answer them. This is really the first trade review I've done in a while. When we were, let me get my thought process back. Dun, 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 dun. And I said when we were here, let me get this. I said the likely target, most likely target, is the open gap, right? But this is the top of an open window. The open gap was at 1976. And the plan was, what was the plan? The plan was, I'm going to get long at 1976 and 3/4. I'm looking for a reversal. I have a large stop here. My plan is to shoot up. That didn't pan out either, right? It doesn't matter whether it panned out or didn't pan out. The fact of the matter is, I didn't take, when I start off my day in a decision-making process that was relatively poor. One second here. When I start off my decision-making process here on a day that was relatively poor, right? My first entry, I didn't take it, and I didn't cascade that into a horrible day where everything was screwed. Instead, what I said was, you know what? I kind of made a series of bad decisions. I'm going to slow down and see if I can't just get the read back again. And then I didn't force my hand at any point. And all of it, because we didn't lose significant amounts of money, all of it seems pretty minor, right? I made a bad call. I recovered. I ultimately had the call correct. And I also identified that I'm going to have to pay better attention to the rotation size tomorrow, right? It's been a couple of, well, now it feels like it's been a couple of weeks since I've traded. So I'm going to have to get that part cleaned back in my head. And how I'm going to do that, I'm going to visualize it and write it down. But more importantly, I didn't get mad. I've been saying from the beginning of the day, had I set myself up psychologically, I said, today doesn't matter. I'm not going to make my year. I can certainly dig a hole on the first day of the year, but I cannot make my entire year on one day, right? And so what happened here was people got bearish, and they probably had the exact same reason I did. China was limit down 7.5% overnight. If it goes down the other 7.5%, we had a good chance of dropping another 30. As a matter of fact, from when we're closing at 2010, another 30 puts us where? Right down to the open gap again, right? Is it possible? Yeah, will it happen? I have no clue, but it's certainly within reach, right? Also, in the positive column, I marked down where I did poorly, right? And it probably did cost me performance through the balance of the day, but I'm still walking out profitable, importantly. But what I did well, right, which is just important to recognize, is I recognized right almost off my first trade that I was a bit off kilter, even if my read was correct, right? And I didn't force my hand, which could have led, if you imagine, as you get more and more tired, right? You have a trader who's making bad decisions, getting frustrated, and then he finally goes, there's no way they're going to rally it into the close of the day, and you end up getting smoked. And one simple rule, guys, you think about this is 20 points, 25 points maybe, at the end of the day here, from people getting short squeezed, right? That if you think about it in your head, if you can avoid these small mistakes, it doesn't matter how many good reads you get, meaning that's great. I read that we were going to come down and test in 1981. Fantastic. It really didn't matter because I smoked myself out on my first trade because I didn't stay disciplined and wait for at least, I could even just said 7 to 10 points of rotation at least, right? If I can't handle waiting for 10, wait for at least 7 to take a shot at it, right? Would have enormously helped my P&L. And look how the day could have changed differently if that occurred, right? So let's go back through this and think through it again. I call the short here. I get short at +7. Instead of making enough where I'm just up 1 or 2 points on the day, I end up capturing this whole move, and I'm ending up, let's say on average after scales, 10 points, right? And then I'm coming here and looking, I see the swing long, right? From the swing long, I go, okay, there's the swing long. And I look and I go, do I get a 50-60? Here to, you know what? Here was a 50-60, I missed it. Swing long triggered. Here's the low. Here's the high. And expand this so everyone sees it. swing on triggers, and almost, not quite, I'm not sure I have this measured just perfectly here, but almost a 50-60 right in here, right? And I'm certainly not looking short. Perhaps I catch this, perhaps I don't. I don't know. But either way, this sets me up for swing long, and I'm not thinking short, right? I then can go on and proceed to go, okay, 20-point rotation up from 1981. I don't get 20, but I get 16, and I got a swing short in here. Again, I didn't post it. I wasn't here to post it, but we did get swing short in this area, and we did get a 50-60 to get it short. And then finally, I'm sitting there looking, going, okay, well, was there any entry in here? Well, there probably wasn't realistically. We went way past the 50-60 retrace in here, right? And I tend not to trade in the last hour. But I certainly could have changed this from a +2 day to a +10 or even a +15 had I managed it correctly. And it's important, guys, if I'm coaching you on one-on-one, it's important to think, to understand, it's important to understand how taking that first misstep, because you didn't have the discipline, like I did this morning, to wait for the proper rotation size and the proper setup and the highest odds looks. Even though we did everything else right, we didn't get caught in the sweep down, we didn't trade in the first half hour, but the hurdle is such that we've got to get all the pieces in the correct places so that we can put the odds to work for us. And anyway, my takeaway and what I learned and what was very valuable from today is this. First of all, rotation size, rotation size, rotation size. Very, very valuable. Number two, if you don't recognize the environment and you don't recognize the environment as one in which you have a high probability of making a lot of money, there's nothing wrong with withdrawing from that area and observing and trying to capture or see what's going on with the market, right? Instead of putting your capital at risk. Third of all, don't, even if you think you have the market completely figured out, and I really today, I really thought we were going to close at lower day, right? What prevents me from getting smoked in something like this? Don't trade the last hour, don't initiate a trade in the last hour of the day, and if you do, certainly have your stops. If you're already short from here, you should have had your stops in place, right? Those are the three lessons. So I affirmed that my concepts are correct. I did a good job reading the read. We were in the hole. We didn't get bearish in the hole, right? And because getting bearish down here, getting convicted that we were going to go to 1950 or 1976, all those people who thought, hey, look, we can't get above Globex high, this thing's going to tank, they all got game, whatever word you want to use, killed, right? And this run up to the upside, which essentially was 1983 all the way to 2010. So what is that? 10, 20 point plus counter rally at the end of the day, okay? And this right here, if you want a reason for why not to short the end of the day, right, even in the most ugliest of bear markets, this is the reason why. And we're still quite crap on the dome, right? We're minus 27 1/4 on the day. There's still a huge gap to be filled above, right? So let's take a quick picture, a quick look at what the bigger picture of what's going on here. Let me pull up a chart for tomorrow. Does anyone have any questions over what I said? Guys in the room? Anyone? This is the time to ask. I don't see any questions anywhere. Okay. So if we look at the bigger picture here real quick. Okay. What's key? First, let's go to a bigger time frame because I'll obviously post out the charts later tonight. Okay, so looking above. There's an open gap at 2036. Is that doable? Well, if we close it, we close out, I guess, at 208. 2036 is less than 30 points. It's 25. Yes, it's doable for tomorrow. But if we got there, would I want to be a responsive seller? Assuming we don't gap above it in the morning, yes, I'd want to be a responsive seller. I would expect responsive sellers, give or take 5 to 10 points at 2036 3/4, right? Next, right, we're going to have some resistance there at 2030. 2030 was important, bigger picture, for the bulls to hold to push above. This now becomes a very critical area. This whole thing right here becomes a very critical area. The ability to push back above puts sellers back in control. Next question we want to ask, right? Again, this is just setting up the general play field, right? The 50-60 retrace from last week to today right now is sitting right here. What's the normal response? If we draw it out, you should have it prepared in your head. We push up, reject, run the stops to the 60, maybe even a little bit behind, and then push down. That would be something I would expect to see, right? What would change my mind on this? Well, two things. If we close above and hold above this with an inability to roll down, but more importantly, what would change my mind was if we could somehow gap above and then we held on the backside test of that open gap and pushed, right? That's what I would expect. If we could gap above the 62 retrace and hold, I would expect a backside test of the open gap from above, leaving this area relatively unauctioned. It's important to note in your notes for tomorrow that this entire area from here to today's close, which is going to be about 2010, right? This entire area, unauctioned. What are the patterns in unauctioned, right? We can always auction straight through, least likely. First time in, reject, halfway through, back down, and push all the way back up and complete the unauctioned area, right? Or the third type, slow grind all the way through, right? How do you identify these? Well, this is easy to tell. There's little to no counter rotation on this, and it's just slowly beating its way through, right? It looks a lot like what we look like right now, right? There's just no counter in the move. Actually, that would look like this. Same thing here. Just move straight through it quickly and leaves a poorly auctioned area behind, just like all of this is poorly auctioned in here, okay? And then the last piece is the normal, reject at the front of it, halfway through, get some rejection, and complete the auction all the way down, and then roll to the downside when all is said and done, right? So this 50-60, again, becomes a very important general area with the open gap being very important, and I would target this on the upside first time in, assuming at least a 10-point stretch in that area, with half-size double stop would probably be how I'd want to attack this area right in here. Additionally, the other way you'll know that, hey, this downside's down, first of all, people get most panicky when we're down. We're obviously down not quite 100 points, but about 90 points from last week's high. Additionally, you'll want to see two things occur. Okay, so let's get rid of this. Two things I want to see occur. First of all, the backside test of this trend line here. Okay, notice that's just behind the open gap right now, and then down this downtrend line, right? In order to have up, we have to get a push up, and so at either of these 2 points, when we come up for a backside test here, I'm going to expect rejection both here, right, and here, first time in, okay? I'm going to expect the market to reject within this general area, right? So what's the next question? Well, what's below us that's important? Well, we know that we have an open gap sitting at 2076. Let's look at the flip side. And again, these are just things I want to have on my chart. What's achievable? We were down 26 points today, and I think at the biggest stretch we were down 40. So if we look at that for tomorrow, so let's do minus 40 plus 40 from 2010. That puts us at 40 down, put us at 1970, just past that open gap. And 40 up. Okay, that is our, this is really our, those 2 points is what I would consider our field of play for tomorrow, right? 50 up, 50 down, 100 points worth of range. And when I look at that, I go back this way, I say, okay, well, what's back here, right? First thing I'll note, open gap. That was closed today. Take that back. There's another one down at 76. Let me go back far enough. It's been a while. Let's push this down. Here we go. So I believe 1981 roughly was our low. Okay, so we have an open gap sitting right here, 1976 and 3/4, right? We came to the top of the open window. That's already been done. This is an unauctioned area in here. Again, know your rules for poorly auctioned area. And then below that, we have a cluster, and I'm going to have to go in and examine this. I really don't think we're going to get much below 1969. We obviously have a support resistance level somewhere between 1967 and 1970, and I would expect responsive buyers in this general area, -40 for a push back up. And finally, leaving it with, right, what's the pattern that we expect when we come in every day? Open up, push down, curve back around. That's our most profitable trading pattern in general, and that's exactly what we followed today, even in the midst of all that panic. Any questions about that, guys? Well, it's time to ask. I thought we did a pretty good job overall. Everyone in the room seemed to do well. It was a hard environment. Okay, well, let's see what they do in China tonight. Another 7.5 point gap up and gap down, and pretty soon we have panic on our hands, right? So have a good night, everyone. I hope everyone had a great day. I know I had an okay day. I thought I recovered pretty nicely from my first mistake to make the day worth trading, and I didn't get caught in any bad way, which is always my goal.